Most people think you need money to scale in real estate. Today's guest built 1.8 million square feet
What's
without
up, everybody? I'm Logan Freeman. Welcome back to the Kansas City Commercial Real Estate Market Pulse, sponsored by Midwest Commercial Real Estate Advisors. Today, we're joined by a special guest and author, Jarred Elmar. This is one of those episodes that applies to anyone trying to build in this business. I think most people think that you need all this experience, you need all this capital to scale in real estate. But Jarred built 1.8 million square feet portfolio starting from nothing, built from nothing. And we're going to go through that today. Just a quick reminder, why we host this podcast is one simple reason, because I have found in the last 10 years, more than anything, after reading 750 professional development real estate sales books, is that clarity beats noise. And there is no shortage of headlines or opinions or predictions about commercial real estate, about business. And I think what's missing truly is grounded market-specific insight from people actually doing the work, listing the properties, leasing the properties, underwriting them, buying them, selling them, and closing deals, right? So the Market Pulse exists to kind of cut through these national narratives to explain what's actually happening on the ground and help investors and owners and operators make better decisions. And here's our team, right? So, and I'm proud to say I can't announce it right now, but I just got a text message, and I'm finally been recruiting my multifamily capital markets guy over for 6 months now. He just texted me, said I'm gonna join. So I'm just super stoked about that right now because I need the help. But our team can really support you as an owner, a business owner, a real estate developer in all regards. I mean, medical office, retail, industrial, multifamily. And one thing that we're doing quite a bit on right now is actually data centers and land. So if you're looking for data center sites, powered land plays, Kansas and Missouri are absolutely booming in that marketplace. So please do reach out to us. You can find us at www.mwcreadvisors.com. I'm always on LinkedIn. You can find me on LinkedIn every single day. I'm trying to keep the mic a little closer to my mouth. I've been listening to my episodes, and I got this real expensive mic, and I want to make sure I'm getting the best use out of it. So if you're watching me and you can't see my face, it's because I'm trying to keep real close to the mic. Man, Jarred Elmar is the founder of the Geneva Group. It's a private real estate investment firm focused on acquiring and operating commercial properties in high growth markets. Since 1999, he's acquired and managed more than 1.8 million square feet of residential and commercial real estate. You got to find out more about Jarred. You got to read his book, Built from Nothing, which we'll talk about here in a second. But he's a self-made entrepreneur known for disciplined execution and the creative deal structuring that you need in today's marketplace. He built his portfolio from the ground up without outside backing. He's also the author of Built from Nothing, a book that shares his blueprint and really turning ambition into lasting wealth, and just fired my ass up whenever I read that book. I was training for an ultra marathon, Jarred, when I was reading the book. And dude, I just tell you what, man, I was just reading that or listening to it right while I'm running, just getting fired up. So welcome to the show, Jarred.
Logan, I appreciate you having me on. And before we even got on, I'm just looking forward to reading your future book, man.
Yeah. Well, I appreciate that, brother. We've got so many questions to get to, so I'm gonna get right into it. But your book is called Built from Nothing. And I think a lot of people feel like they're starting from nothing. And now, I mean, you didn't write this, during the period of time where AI was just basically taken off, right? But like now people are more worried than anything, right? No connections, no money, no roadmap. But you argue that starting from nothing can actually be an advantage. So I want to start there. What does Built from Nothing actually mean to you? And why did you write this book?
I mean, the strategies that I still use even today were all out of necessity early on. So I was not a financeable guy. I wasn't a bankable guy. I literally had to, I didn't have any relationships with banks. I started on the commercial side in 2010, where even the most seasoned guys weren't getting financing. Prior to that, I bought a course, and it was late 99. And this is a guy who controlled all the airwaves in the 2 a.m. infomercials on television.
Oh, yeah.
Carlton Sheets. And he started a lot of people on the real estate path. And it was buy houses with no money down. So I bought the course. I worked the course. And the whole idea was owner financing being able to buy a house where ultimately the seller was going to hold paper on the asset. And, it took me a year and a half of cold calling, pounding the phones, knocking on doors to finally find a guy who took a chance on me. And with $1,500 to my name, I bought my first house. Fixed
Wow.
it up. I had my buddies help me fix it up. We got rid of the riffraff, and then got a better suited tenant in there with a higher rental, rental rate. And that's how it all started. So that gave me proof of concept, and it was one after another after another. For me, it's been a natural evolution from residential real estate investor to commercial. And I recognized later on, after I sold a part of my residential portfolio, the way to really scale or have economies of scale in this business is on the commercial side. And I don't think I'd be challenged with any of your listeners. Once you go into commercial, it's very rare that anybody goes back to residential.
Mm-hmm.
Truly, because you can scale a business with a lot less brain damage with commercial. And again, we talk about commercial, office, retail, industrial, multifamily. Some people find that niche. We tend to be opportunistic. We like looking at all product types and have as many at bats as humanly possible to find, as I say, the steals, not just the deals.
Yeah, absolutely. And talking about one of those steals, so to speak, I was watching one of your videos up on LinkedIn the other day, and you're walking through a huge retail center, and you got the out parcel as well. I think there's a gym in there.
Yep.
And you were talking about the amount of cash flow that has generated over the last, I don't remember, I think it was 10, 12 years, right?
Going 14.
But what really stood out to me was you just said, finding the steals, not the deals. That was a fully marketed deal.
Yes, it was.
And you made sure that everybody saw that, right? But it goes back to this idea that the best time to plant a tree, right, is 10 years ago. The next best time is now.
Right.
And I was just talking to somebody yesterday, and they're like, man, I was looking back at all the deals that I was brokering in, 2020, looking back, wishing I would have bought all of those deals, right? So I think it's one of those things that in commercial real estate is Peter Lindemann talks about this, and he says, if you have capital and courage and a long-term time horizon, it's really hard to lose.
That's right. That's right. I mean, and there becomes a time for us, I mentioned this before in a previous podcast, for those that are raising money and trying to figure out when to sell, when not to sell. When you're in the syndication or the fund model, you're going to ultimately have a hold period that you normally have to adhere to. And in the beginning, it's paramount that you sell.
Mm-hmm.
It's always tough because you realize you can get very wealthy and earn a great living turning and burning, buying a property, fixing it up, selling it. You get uber wealthy holding, having generational wealth, holding assets. But in the beginning, you really have to, you have to have proof of concept to your investors to build your investor base, and you have to stockpile your own cash. So I always say that there is this transition, and at a certain point in a career, you don't necessarily need the big pops. You don't need the liquidity events. You're just looking to create more and more annuities. And that's kind of where we're at. But it took a good 10 years for us to get there.
Absolutely. Well, let's go back 10 years, so to speak. And first listener question is, well, first off, if you haven't read Built from Nothing, make sure to go get it. It is an unfiltered, motivating journey from humble beginnings to a multi-million-dollar success in real estate. So definitely go read the book. I don't give a lot of book recommendations out. I'm known in the industry as an avid reader, but I've really slowed down on my reading because I found out that 700 of the books on my bookshelf were saying the same thing, just in a different way. Right. So, what I read now is really the Bible, and I talk to people. That's kind of where I learn now. But if this is a great question that came in. If somebody is 25 and starting from nothing today, what would you tell them to do? Right. And I know you've got stories in the book, but maybe if somebody hasn't read the book, give them some advice.
I mean, I thought about it. If somebody like me, if I'm 25 and I want to get in this business, if I would have done anything differently, I think anybody who has the time, first of all, you need the education, and the education will come from, for me and for a lot of your listeners, probably comes from the streets, right?
Mm-hmm.
Standard academia wasn't my flavor. I was much better hands-on and just going to work. And I started doing a lot of self-development courses. Looking at it all, I would be in commercial brokerage.
Hmm.
We always say, residential brokers, realtors, they tend to be a little frowned upon in the residential industry, but in the commercial space, they're an absolute must. They're our lifeblood. 70% of our deal flow comes from the brokerage community. So I would be a broker. You're going to learn a tremendous amount early on. You're going to understand the terms in the business and the fundamentals, and that's what you ultimately need before you actually start taking on investor dollars or thinking you're going to jump into even a 10,000-foot retail shopping center and actually know what you're doing. So for me, it would be getting my broker's license.
Yeah, that's great advice. Obviously, I'm going to second that because that's how I got started in the industry. Right? I got the experience on over 150 deals before I ever bought my first one.
Absolutely.
Right? So I got to see, and people are like, well, didn't you miss out on a lot of deals? Sure, I sure did. But I'll tell you what, it also taught me the deals not to do because I saw what was really challenging and what worked, and then I figured out where my unique advantage and competitive advantage was, and now I can pour into that, right? So now I'm doing development deals on the brokerage side that now I get to invest in as an investor, and I don't have to run point on all of the stuff that I don't like doing, right? So I found my own kind of model to continue to build my portfolio. Building upon that advice, we've got some questions around mindset and discipline and decisions, right? I mean, it's apparent that you're in the gym on a regular basis, right? And I know from reading the book that that's one of your main habits, but
Fortress of solitude.
yeah,
Exactly.
exactly.
Crystals, I got the gym.
Yeah, there you go. So what habits changed your life the most, just as you've been going through this journey? As people are always talking about routines and habits and mindset and things like that. I think it's a good question. And do you have some non-negotiable habits on a regular basis?
I mean, I'm sure a lot of your listeners have heard this. It's all over YouTube. Any successful person that gets interviewed, the number one tip for a young person is making sure that they pick the right life partner.
Mm.
And I was lucky enough to do that for a very long time. I was married for 21 years, and we were very young. But the person that my ex was, she kept all the distractions away from me. So I could be laser focused on what I do best. And we talk about this in Strategic Coach. You have a unique ability, and you got to figure out what your unique ability is, and don't get mired in the details of any other minutia in your business. Focus on what you're very good at. If you're really good at talking to people or raising money, that's all you should be doing 95% of the time. And people get mired in the details, and we're all guilty of it. Especially as you grow a business, it's hard to let go. It's hard to give somebody autonomy with something that's so important to you. But you got to get uncomfortable to grow, and it starts right in the beginning. I think I answered your question.
Yeah, no, most definitely did. I think that some of the things that I take away was people always are looking to add things to their lives, right? It's like, what do I need to start doing again? And Tim Grover really taught me this. Is like when he would, was working with Kobe and Michael, and they won a national champion, an NBA championship, right? They win the finals. The first thing they come to him and say is like, all right, what's next? What do we need to add? And he stopped them and said, what do we need to subtract now that you've had all of this success so that we can stay focused? So maybe what are some of the things that you have had to maybe give up along your journey, right? Because we as entrepreneurs have to make sacrifices, and there's things like that. I was just talking to a buddy yesterday. He said, man, I haven't really heard from you for 15 months. I'm like, dude, I've been building. I've been grinding. I do nothing but go to church, eat, work out, work, and spend time with my family. Like, that's it. Like, I dropped golf. I dropped all the things. But what did you have to give up during your journey to get to where you are today?
I wish I figured this out so much earlier, but it's only been probably the last 10 years where I truly understand discipline is nothing more than, deciding what you want first, or deciding what you want now versus what you want most. And that those usually don't go together. When I was younger, getting in this business, what I wanted most, I'm in South Florida. I wanted to be at the beach. I wanted to be at the clubs and everything with my buddies. And it takes a tremendous amount of self-discipline to step away from that and focus on what you want most. And that stops most people. Everybody talks about, I want to start a business and I want to be rich. I want to do this. But if your actions aren't matching those long-term goals, you're never getting there.
Yeah.
And that's what it all comes down to. And Like I said, luckily I was at a very young age, I found somebody that really allowed me to just, as somebody with ADD and struggles with any other multitasking, I had somebody that allowed me to just be laser focused on what I did best. And it worked out really well. And to a certain degree, because of that partnership, um, I felt like I was in the zone for 20 years.
Yeah. Yeah.
So that is the first thing I would say. And if you're a young guy, if you're 25 years old, you don't need the partner. Educate yourself. You need to learn how to be a man right now. That's the focus. And there is so much content out there to teach you whatever industry that you're interested in. And many times you're going to realize you don't want to be in the industry, or especially with commercial real estate. We talk about all these different product types and even the alternatives like mobile home parks and self-storage. It's going to take you a tremendous amount of time and focus talking to the brokerage community, looking at offering memorandums left and right, figuring out what makes a good deal, and then figuring out what you really want for your life. I wanted to build. I wanted to scale. You don't have to get big to get rich. I have 1.8 million square feet. I have a lot of colleagues in my industry that have 5 million square feet, and they're younger than me.
Right.
But the amount of ownership that they have on those deals are very little. So I decided I'm going to be super selective. I'm going to look at deals that are absolute, knock it out of the park, screaming off the page deals, so I can hang on to more ownership. So we could buy double the deals that we do, but I've decided that I don't want to have 5, 10 million square feet. I want to have a lot of ownership on, several million. And I know that sounds like a lot when you're first starting out, but we did this one deal at a time. I'm telling you, one shitty small bay industrial deal, one shitty apartment complex at a time. And it was always dialing for dollars. It was never a fund. It was never institutional capital. It was literally finding investors that were coming in for 100 to 250,000 at a clip. And we did it 14 years. We started that 16 years ago, and we're still doing that exact same model. And it took me a long time to realize that you don't need the institutional capital to get big, to get wealthy, to focus on what your real goals are for your life, which mine is charity. It takes complete structure, organization, and keeping the distractions away from you.
Yeah.
That's where it becomes who you surround yourself with, including your team.
Yeah, you definitely catch what you're close to, right? So that's something that I love to say. I think that's from John Wooden or Jim Rohn, one of the two. You catch what you're close to, so always remember that. Now, shifting focus just a little bit, now that you're where you're at, right? 1.8 million square feet. What did you learn of this? Is a great listener question, and thank you for sending the questions in. Drop them in the chat, email us. We'll get them over here. What did you learn about risk that most people don't understand? And the second part to this is, how do you personally evaluate risk today? I think that's a very timely question. So appreciate that.
What do they say? 95% of all the tragedies in your life never happened.
Yeah.
It's all in your head, and it's these limiting beliefs that we all put on ourselves because we're avoiding pain. Tony Robbins always talks about, you avoid pain far more than you want to gain pleasure.
Yep.
So it took life throwing a lot of shit at me for me to realize that even if it's bad, it's not so bad. I talk a lot about the apartment complex, my first real commercial deal, 156 units. And I underwrote that thing in and out. I had help. I had seasoned guys looking at my numbers, walking the property with me, because it was my first deal outside of residential, single family homes. And things happened that I could have never predicted. I had a murder inside of 30 days. I was like, my career is about to end before it even started. And granted, it could have gotten a lot worse, but it didn't. And we wound up doing extremely well on that deal. So, I have so many people that I talk to that are highly educated, and they're really trying to break into the commercial space. They're trying to build their own portfolio, and they're so busy and so mired in the details of building the business. And they start showing me these organizational charts and all the things that maybe EOS shows you. And I'm like, guys, you're missing the whole point of this business. Go find a deal first and then build the business around it. I know it's jarring when you go after a deal and you don't have the infrastructure or a lot of the experience to run it, but you you will get a master's degree in whatever product type you buy within a year of ownership. And you're never going to be able to predict all the things. So my best advice is go focus 100% on the deals. And then once you get the deal, then you can start thinking about, okay, I need an admin, I need somebody for accounting. That stuff is easy. You can line a lot of that up inside of 30 days. But the deal, the real deal, where you're going to be able to raise money for it, is going to take you every bit of 6 months to a year.
Yeah.
Find that real deal. And that is the most important thing for anybody that jumps into this commercial space. You can't afford to have your first deal go bad. That's just not a thing. So you're going to overlook deals that probably would have been good to hold in your portfolio, but you got to find the real steal, and it takes time to do that.
Most definitely. Well, I mean, let's dive into the idea that you can't have your first real estate deal go bad. And you burned the boats, man, on that apartment complex. So let's just talk a little bit about that. Again, go get the book Built from Nothing for the full story. But this, I mean, when I was running, my eyes were just like this the whole time. I'm just like, oh my gosh, listening to this, man. So you burned the boats and you managed that risk, but you also, rolled up the sleeves and got to work on this thing. And I do think there's a lot of people out there in this industry that are buying deals. They live in Atlanta, they're buying them in Florida or Arizona or something like that. And they're not going to have that ability to do that, man. But you basically moved on site and cleaned this thing up. So walk us through that.
I mean, and these are the things you could never predict. It's not ever factored in anybody's underwriting. We bought 156 units at less than 10,000 a door. It was the hood of Atlanta, Southside Atlanta, but I knew the market well because I had houses at one point scattered all over the market in that down south. And so I knew the good pockets of a bad neighborhood. And this was a good pocket in a bad neighborhood, but it didn't stop me from having a murder within 30 days. I had 2 fires within 3 months of ownership. I had a strong arm robbery. We had a couple other shootings on site, and we had a truck go through one of the apartment units because it's Atlanta. You got hills, and it was a manual transmission. The guy didn't put it in park, ran into the leasing office, and the truck just rolled right into somebody's living room. Luckily, it didn't kill somebody, but you can't predict any of that stuff.
Right. Yeah.
And I love the story, and it never gets old because everything that could have happened wrong on that deal, my first deal, went wrong. And I know now in hindsight that was not the right deal for me. That was not the first right deal for me. And I would encourage everybody out there to focus more maybe on retail, or if they do have some capital sources, to look at newer vintage apartments and not focus on those 60s, 70s vintage apartment deals in suspect areas. Because I got lucky that I bought the deal in 2010 when I was on the basement floor. Like, it was the bottom of the market, as everybody knows. But it wasn't the right deal for me. And thank God I wasn't bankable, because we had so many things go wrong, and I underestimated how much CapEx this asset really needed and how beat up it was going to get every single month because of the demographic, that I would never have been able to support the mortgage payments if I got debt. So luckily the bank's like, yeah, sorry, you're a rookie and we're not financing you. We're not even financing guys that have, plenty of these complexes.
Right.
So I was forced to raise the capital. Now, again, it was 10,000 a door. So it was $1,525,000, I remember, is what
that is wild to think about, isn't it?
Yeah. And listen, if that deal came back around today and I was able to buy it at, I don't know, $10,000, $15,000 a door, I wouldn't buy it. I'm not interested. And the brokers that bring us deals like that, they know, we're not interested. We're not buying older vintage. But again, my way is not the only way. We looked at multi, and then we got into retail, and then office, and then industrial. And industrial is what really stuck for us. And we've been really focused on industrial for the better part of 10 years. It's been the bread and butter, and industrial has been great to us, but it's not ideal for everybody. Yeah.
Well, I think you just answered the question about this personal risk spectrum, right? Because back then you did do the deal and you took the risk, but where you're sitting at today and all the lessons that you've learned, it's like, look, I mean, even at $10,000 a door, well, maybe, Jarred, you just get that deal under contract and then call a buddy and sell it to him for $25,000 a door or something like that. But I can't imagine an Atlanta apartment complex for $10,000 a door anywhere in the United States. Hardly. Unit turns aren't even $10,000 a door these days. So that's just
The world has
fascinating.
changed a lot since then. That's
It sure has, man. Well, let's talk about this. I mean, a lot of people are thinking about creative deal structures, right? 10-year treasury just bounced up to 4.3% risk. I mean, the risk premiums and the spreads have kind of blown out a little bit. It does take some creative deal structuring. What have you seen over the last couple of years be very successful? Is it seller finance? Is it a combination? Like, how are you making these things work, or is it just traditional bank financing?
I mean, we're always, seller financing was critical in the beginning of my business and probably anybody else's, but we still look for it. The model hasn't changed. Our model really hasn't changed. We have different, more sources of capital, more sources of debt, and I've done everything from credit unions to CMBS loans, life insurance companies, national chartered, state chartered banks. So we borrow across the board.
Yeah.
But we're always seeking owner financing, and here's why. If the banks have gotten very, very smart, right, since GFC, and they've covered their ass every which way.
Yeah.
So if the shit does hit the fan, and we have another catastrophe like a GFC or an SNL type crisis, all bets are off. But they're covered, and they will take the asset back. Whereas seller financing, you have somebody that probably is tired of running the property. We're looking at assets that are with ownership groups 20 years or longer because there's life changes. They're older. They don't want to take the trash out anymore. And they've exhausted all the tax benefits for holding the asset. So a lot of times they're much more inclined to take a note back, so, hold paper on a deal. And if the shit does hit the fan, they're more likely to renegotiate a deal with you. Whereas the bank is, they're like the mob. They're not giving you any leeway most of the time. Obviously, these last few years have been a little different, with hybrid remote working and specifically with office. But normally, the banks are happy to take the asset back, and they're covered to do so. But somebody's holding paper is not looking to get their asset back.
Yeah. Well, I'll just say anecdotally, I got about 10, 12 listings out there, and a lot of the deals are, that I'm getting in from an offer standpoint have some sort of component of seller financing, right? And so you have to have the right seller because they need to have the equity and the ability to do that, and I think that's why I get so many of those offers, is because people are fishing to see is this an opportunity for this. A lot of times it's not, just because the owner is, maybe they've got a decent amount of debt on there, or they just want a clean sale, but they're not probably going to get their price that they need to get, right? That's the other thing, right? Is like, I was structuring a deal the other day where they're asking for 20-25% of seller carry. And, I kind of ran the numbers and math, and I was like, this person's basically trying to do this deal with no money in, right? Like, and I get it. I understand it. But like, also, where the owners are that I'm working with, they're smart enough to see, well, they don't really have any skin in the game other than just, signing on a smaller note on that side of things. So it just has to work out for both parties. But I have also seen it be extremely advantageous for multiple different groups and work out really well. And guess what? 2 years later, they, were able to refinance, and everybody was happy, and it moved on, and the deal was done, versus it just staying stagnant.
And listen, I believe in seller financing so much, even in today's stage, that I've thought about how to sell off a bulk of my portfolio when I get older, and that's to find somebody that's like me, a young hustler that's coachable, to hold paper on a large portfolio and start his career off right. I believe in owner financing. We sell assets with owner financing, and let me tell you, the other thing is, for those people that are looking for sellers that will consider holding paper, the best way to hold a deal, the best way to sell a property that you no longer want, is to do seller financing. So that's where you're going to find a lot of motivation. If they're willing to hold paper, you're going to be able to dictate terms. And I always say, and I learned this from my mentor, Scott Scheel, who always said, I could pay your terms if I could pay your price if you give me my terms.
Right.
And a lot of times we will pay a premium because of how we're structuring our capital stack with owner financing.
Absolutely. That flexibility is huge. So I just kind of want to get to, I know we talked a lot about, systems and EOS and things like that. And a lot of people, unfortunately, they get started on like getting this big structure put together without having anything to actually go execute on, right? I've seen it many times. Got this beautiful business plan. I'm going to do this and that. I'm like, okay, great. Like, what are you working on? Well, we're not really out, looking for deals yet, or we're underwriting a bunch of stuff and not seeing anything, right? But like, I don't know, man. I just think the action is so important. And in reading the book, it's apparent that you have an inclination to take action, and I do think that is so important in this industry. You've just got to get started, and you got to get moving on something.
And Logan, we got a policy in our office. We send out 2 offers a week.
Yeah.
2 offers just to get a dialogue. Every single week, religiously, our policy is 2 letters of intent go out a week. That's taking action. That's, building. Look, this is a game of numbers. You're going to insult a lot more people than you don't. But you want to start that dialogue, because a lot of times no just means not right now. And there's life circumstances, things change. And ultimately, if you start the dialogue, you have a better chance of getting it than them, blasting it out to the market when they're really motivated to sell. So that is our policy, and it's us taking action each and every single week. And we 2 offers a week religiously, but we buy 3 to 5 deals a year.
Yep.
So we're looking for those true value add steals.
I love those numbers because them, right? It's like 100 offers is going to get us 3 to 5 deals, right? And a lot of times I'm trying to, break down what are the key performance indicators, what are the actions that need to be taken in the business that are going to yield the results, right? And then like just have a few of those. So for me, it's meaningful conversations, it's revenue generating meetings. How many are scheduled? How many did I have? And then my goal for our team is to get 10 proposals out to owners on a week, on a monthly basis. And if I can do that, I'm probably going to be able to have the pipeline that I need to be able to scale effectively. So I love to hear that it's 2 offers per week religiously. Has there been periods of time where more of those offers have hit than where we're at today? What's your read right now? I mean, in regards to, you think the gap between owners and where you guys are at, is it shrinking? Is it getting bigger? What's that look like?
The pipeline's looking a lot better now.
Yeah.
But it's been a grind. The last 12 months have been a grind. And that's just because, when buying power changes so quickly with rates blowing out like they did, there's no ticker symbol at the bottom of your television telling you what the values of real estate are.
Right.
So nobody really knows, right? There's no price discovery if there's not a lot of transaction volume. And that's really what happened to this market. So right now I talk to brokers all the time. They are a big part of our business, and they've never been busier. They've never had more listings ever.
Yeah.
And that is because sellers are now starting to say, okay, I got to figure out what the value of my assets are. Let me go ahead and test the market. So because of that, we are seeing a lot more volume. Now, again, a lot of stuff is still not making economic sense. Obviously, with the uncertainty, with everything going on, Middle East and everywhere else, everybody's a little uncertain, and everybody's a little bit more, there's a lot more trepidation to move forward and close. So everybody's baking in more of a cushion on their underwriting. But the gap between the bid and the ask on most commercial assets are really starting to narrow. So we're seeing a lot more at bats. There are certain asset classes I like more than others right now.
Talk about that.
I mean, listen, I'd like to think that office has been beat up enough, and here I'm the first one to say, I think 70% of most office product in America right now is a bit obsolete. I think there's higher and better uses for the land, but the 25 to 30% of highly amenitized buildings in central business districts, you're able to buy at cap rates 200 basis points higher than you were 2.5 years ago.
Yep.
So it's that I think that's a great opportunity, but it's got to be the right asset. We're seeing deals at 10.5 caps. I haven't seen a 10.5 cap deal widely marketed since 2009, 2010. So I think there's an opportunity with office, and I think there's a lot of noise, like you said, Logan, and people are like, well, hybrid and remote, nobody's coming back to work like they thought they were. Oh, and now AI is going to destroy office. I'm not a believer in all that. I think there is a great opportunity for trophy assets. And that's kind of what we're looking for at this stage, is deals that really haven't traded, that have been sitting in families for decades. But these generational real estate families, they have to rebalance their own portfolio too. They have loans coming due. They have that shopping mall. They have assets that are a thorn in their side right now, and they're rebalancing. So you're seeing assets trade that really haven't traded in 30 years, 40 years. Those are the type of deals that we're starting to look at as far as that product goes. And I think multifamily makes a lot of sense. I think multifamily, with the lag of construction over the last year and a half, once all that stuff that came online gets absorbed, and you're not competing head to head with brand new product. We have a mid 70s vintage apartment deal in Atlanta. Our one bedrooms are going head to head with brand new construction because the merchant builders need to get out.
Yep.
Because their carrying costs have gone up dramatically. Construction costs have gone up. The time to get everything completed has changed. So they're fire selling, but they're selling the dream to the next guy, saying, "Well, rents are here, but we're putting people in here." It's going to be like that for another 5-6 months. But I think toward the end of the year, there's going to be great multifamily opportunities, and that's what we're starting to focus on too.
Yeah, that's good to hear. McKinley is saying you had a 3% conversion rate. And I said, yeah, man, that's disciplined capital deployment right there. Making 100 offers, buying 3 to 5% conversion rate for sure. Yeah, that's the business. That is what it is. And I don't think many people want to hear that. And it's like, also, how many deals did you have to actually underwrite to make those offers, Jarred? Right? I mean, it's like you're looking at 500 to 600 opportunities just to find the 100 to make an actual offer on.
We dive into at least 5 deals a day. We have 25 that come through, but we're looking at 5 deals a day, and we're really we're spending time on at least a few a day, and then we arrive at 2 deals a week that we like, and we have our pipeline meetings, and we have our structure. We try to be pretty procedural in that respect.
Yeah,
it is truly a numbers game, and the greatest deal I've ever seen comes around about once, twice a year. So, it's everybody thinks that, they're going to miss out on this deal. We need to buy this deal. That deal is going to come around 3, 4, 5 months from now. A deal similar to it, where the economics, are comparable. And that's, we could buy double the deals that we do with the capital resources that we now have. But we've averaged, on 65 transactions since 2010, we've averaged 33% IRR, net of fees, net of promote to our investors. We do that because we are so selective on what we actually buy. I don't want to manage or burden my office and my office resources on a deal that's marginal, and I got to hope that I'll make a small return out of it. It's got to be blaringly obvious that there's a lot of mismanagement, fixable holes right up front, and just vacancy that we could backfill. We're very fundamentally driven. I'm in South Florida, where you could be a momentum type investor, and as long as you catch the right side of the market cycle, you make a lot of money.
Right.
But we don't live by that. We're very fundamental investors.
Absolutely. Another good question just came in. What defines a high growth market for you? Like, what are you looking at from a demographic standpoint or demand driver standpoint to say, man, that's a market we want to be in?
I mean, it depends on what asset class, but specifically with retail, for us, retail is the easiest to go into outside markets. So if there's any nugget to take away for anybody who's trying to get a lot of opportunities thrown at them, the retail asset class has it's a very much paint by numbers product type. If you have the right traffic counts and the right access and the right parking ratio and curb appeal and visibility, you can do a lot of due diligence just on a desktop. And when we're looking at demographic, what's the 1 mile density? What's the rooftop? How many rooftops there are in a 1 mile? If you're looking at like a neighborhood shopping center it's more experiential based, like a gym and a buffet and hair salon, that type of neighborhood shops that I don't think is ever going to go away. We don't care what the 3 and 5 mile radius density is. We want the 1 mile.
Yeah.
So we're really specific on what that 1 mile density needs to be for us to be interested in that property. If all other fundamentals everything else checks. So obviously we want to know, is that market, retaining people? Are there more is the population growing, or is it fizzling out? We don't do much in the Midwest, and we don't do much in out west or the Midwest. We're really focused on Southeast. Southeast has obviously had a big migration, pull. And, we've looked at some amazing deals that look like amazing deals on paper in Cleveland, Ohio, and Minnesota, Twin Cities. I don't want somewhere where people are the people that are there are saying they don't want to be there.
Right.
So we're really focused on markets that are a lot of employment drivers, a lot of lifestyle drivers. Political environment does play a factor. I mean, it's just
For sure.
and so those are some of our hot buttons, along with all the fundamentals of whatever product type it is.
Right on. Well, to all my buddies, real estate brokers in and around Florida and the Southeast, y'all need to get on Jarred Elmar's radar. Get him some deals. Make sure he gets you guys an offer. Make sure you reach out to him. Jarred, let's get to the quick takes, man. What's your favorite book or podcast that maybe you've written?
I mean, Think and Grow Rich, I know is a cliche at this point, but there is no better book on the planet than Think and Grow Rich, Napoleon Hill.
Yeah, it's so good, man. I just want to give a plug for John Mitchell, who wrote kind of the second part of that, because Napoleon Hill, it's been the most pressing book in my life as well. Kind of tells you about this secret, but doesn't tell you what the secret is necessarily. And so, John Mitchell wrote the book called The Secret, what was it called? Sorry, the Missing Secret. Okay, The Missing Secret, and it's all about the component of applying Think and Grow Rich. So check that book out as well. I freaking love that book. John Mitchell is just a powerhouse as well. So thank you for everything you've done, John. Do you listen to podcasts at all?
No, I listen to a lot of
Audible books. Yeah.
Yeah. Another great one that you get a lot out of it. It's a lot of audio. But it's the 48 Laws of Power.
Yeah.
That really makes you understand mindset and how our psychology works, and how it's been for hundreds and hundreds of years, and just how we're wired as humans. So that's an amazing book.
Yep.
No matter what industry you're in, that book is great.
Yeah, Robert Greene is a gift to the society, and I read that book and then the 50th Law as well, which was all about 50 Cent. And his protege is Ryan Holiday, who obviously has blown up crazy with stoicism and everything like that. So fantastic reads there.
I've met Ryan. Yeah. Obstacle is the Way. One of the best books too.
Yeah, it's a wonderful book. All right, cool, man. What about? You've done 65 deals now. Commercial deals. Can you think about one that's the best that you've ever done?
Yeah, the one that put us on the map was a furniture building, a furniture company, and this furniture company was synonymous with high quality in South Florida. It transferred hands to the next generation. He drove it into the ground. They got down to 3 locations. We ended up buying all 3 locations based on the lease rates that the father drafted for the son, which was like $2-3 a foot in a market that was getting $15 a foot.
Wow.
So we knew that if we can get them out, the property would be worth, multiples of what we bought it for. And that's what happened. It took us months, but we finally got to the negotiating table, bought out the leases. We started building relationships with furniture companies because that's the general area that they wanted to be in. So we backfilled them with what's Haverty's Furniture. That deal truly put us on the map with the brokerage community. The fact that we got them out, bought the lease out, renovated a 60,000 foot building to accommodate a national publicly traded furniture company like Haverty's, and we killed it. And I was still building my investor base, and that was just a home run deal, and it allowed me to stockpile enough cash where I could be a little bit more selective on how I structure my deals.
Absolutely. Love those deals, man. That's fantastic. And there's a lot of layers of complexity that you had to work through on that thing too. So you were rewarded for the work, because I think some people might listen to that and be like, oh, okay, yeah, I'll go find that. No, there's a lot of work that goes into what he just explained. So I appreciate that. Yeah. What's one thing that investors overcomplicate, do you think?
It's not all. We talk a lot about the numbers and the underwriting and how selective and how conservative we are on our underwriting, but I think a lot of investors overlook the intangibles. There's a lot of assets that we bought. They fell out of contract. They were widely marketed. Like we said, this furniture company, there was a million reasons to walk from this deal because we were thinking we were going to be buying ourselves a lawsuit, but based on a lot of the intangibles, things that we just knew about the mentality of the people that we were working with, the characters in the family, if you will, the motivation, the fact that we had the tenants in due diligence that were potential tenants that would be interested in the space. These are all intangibles. These are things that have nothing to do with the actual numbers on the deal. And I think, most investors, they're looking at the offering memorandum and just taking that as the gospel. Institutions only care about the numbers, which leaves an amazing amount of deals, true steals, available for nimble guys like us. We want to know. We ask the brokers all the time, why is the seller selling?
Right.
How old is the seller? Is there anything that's changed in his life? Like, I'm focused on the owner first and foremost before I'm even focused on the economics of the building. And brokers, still the top dogs in the industry, always ask, why do you keep asking this question? Like, what is, how old is the owner? Why do you care? And I mean, that is everything. It's the motivation of the seller, and that's how you strike good deals. And it's not a matter of taking advantage of somebody. 90% of the deals that we do, they're win-wins. They really are, especially on the seller finance side. Unless you're just, a scam artist and you're looking to, jump ship on paying somebody at a mortgage. But if you have integrity, we're always looking for those type of owners that are looking to hold paper, as we said.
Absolutely, man. Finish this sentence for me. Success in real estate is what?
Success in real estate is not having to come to the office anymore. I have a good team, and I have a very intelligent team, and Henry Ford was emblematic of this. He said, I surround myself with people that are a lot smarter than I am. And I've taken that and run with it. I'm a high school dropout, and I have Ivy Leagues in this office. So, they're much better than me on so many skills in management and accounting and everything that goes on with managing a real estate portfolio. I can see around the corners. My unique ability is more instinctual and obviously raising capital and keeping my relationships with my investors. But when we're not buying anything, there's not a whole hell of a lot for me to do.
Right.
It's nice to be at a point now where I really don't have to be in the office and I won't lose any revenue. We may not grow as fast, but
sure,
it's nice to have that flexibility.
Wonderful, man. Well, hey, I really appreciate you being on the show today. Point people in the right direction, man. They want to learn more about Geneva, the book. Where can they head to and find out more information?
Well, the book, Built from Nothing, is on Amazon. It's also on Audible. So if you care to hear my rugged tones at night, I narrate the Audible. My website's genevagp.com. If you're interested in having, we're always bringing on investors, and the way we do things is very interactive. If you're looking to really learn the business, the best thing to do is start working with an operator. You're going to learn a hell of a lot just being a passive investor, a limited partner with me or other operators out there. We do videos each and every month. We do distributions every month, which is very different, not really industry standard. But we do the videos because I want to educate my investors, and I also want to stay relevant to them in between deals. So I want them to see my face, and I want them to see that we're actively, managing our properties and telling you what we did to enhance the value of the property, what we're about to do. So those are the things that we bring to the table outside of just the returns that we've historically brought.
Beautiful, man. I love it. I very much appreciate it. Go check them out. Can't highly recommend the book enough, guys. And I have read it multiple times now. Sometimes just like read it just to get fired back up. So you got to go check that book out. If you're interested in Kansas City commercial real estate, find me on LinkedIn every single day. But www.mwcreadvisors.com. This has been another episode of the Kansas City Commercial Real Estate Market Pulse. Jarred, really appreciate it, man. Not only that, I'm just stoked that you are sort of getting on LinkedIn and like just getting the message out there. We need more of that from true entrepreneurs, investors getting out in the marketplace, dude. So I really appreciate you doing that.
It's all about how many people you can bring with you now. Like that's real legacy. It's not raising kids and raising good kids. It has to go beyond that, and just getting content out there that can change people's lives. That's how you bring people with you, and that's why I keep doing a lot of the social media stuff.
Yeah, well, you're doing it, so very much appreciate that, and thank you for all the listeners and all the questions that you guys sent in. Hopefully, we got to all of those. We'll check you out next time on the Kansas City Commercial Real Estate Market Pulse. Thanks for being here.
Take care.